Volume. As we advance further into your trading journey, we're going to be layering in new concepts and tools. These will act as additional points of confluence, which are ultimately going to help us confirm our bias as traders. Zorn mentioned volume briefly at the end of the last lesson in candlestick formations. Here we're going to be doing a deeper dive. So what is volume? Simply put, it's the number of units or contracts traded in an asset or an entire market during a given period of time. Let's start with something simple like the stock market. A stock is comprised of shares. In the cryptocurrency market, we would be looking at tokens or coins. Now let's take that one step further. The shares being transacted between a buyer and seller are going to be recorded in the volume. The same would be for tokens and coins. If we are looking at a particular time frame, let's say an hourly chart, the total number of times the asset is transacted between buyers and sellers during that session will be recorded in the total volume. You're probably asking yourself, well, why does this matter? Well, volume is a leading indicator. It can help us get those clues that we want to figure out which party is in control, the buyers or sellers. Ultimately, we want to be riding the trend of the dominant party. Now going back to contracts, let's break this down because this is a term that we haven't spoken about, but I'll dive into it briefly. When thinking about different asset classes, we're going to be learning about different financial instruments. As we advance further into the course, we will be learning about the derivatives market. Contracts are the units we will be looking at in the derivatives market. Back to volume. Knowing that each time a buyer or seller has transacted and it's equating to recorded volume, we can use this as a tool like we just spoke about to identify which party is in control. It's also going to be useful in price action and chart patterns in the next section. So why is volume important? Well, as we spoke about, it can give us a sense of who is in control. And by figuring out who's in control, it's allowing us to see the overall interest in that asset. Looking at the interest by the buyers and sellers around key inflection points is a big part of this. Let's take, for example, the support and resistance flips, or the support and resistance breakdowns we learned in prior lessons. By seeing big spikes in volume around these trading areas, it can help us confirm a breakout possibly, or maybe the buyers don't have enough steam to push through that price point. We're going to be going over these in volume scenarios in the next slide, so we'll start to make more sense. Volume, as we said, is another tool or point of confluence. When we're looking at the overall big picture, we can use volume to look for potential trend reversals or fakeouts. Fakeouts are not something that we've gone into too much, but in the range section and when we were looking at market structure around expansion and contraction, volume is really going to help us hone in on whether or not price can get through those key levels, because we're going to see it and how powerful the buyers and sellers are around those key points. Lastly, volume is a measurement of liquidity. Now, liquidity is not something that we've spoken about, but there's a whole section on it called liquidity theory. And as we get into the more advanced section, volume is going to help us really understand what's going on. Again, these are all things to look forward to, but for now, let's skip over to volume scenarios. So there's 4 volume scenarios I want to go over, and these are all indicative of which party is in control and how we could possibly spot trend reversals or exhaustion points by buyers and sellers. So let's get right into it. When looking at price and there's an upward trajectory and volume is rising alongside of it, this is illustrating strong buying. This is bullish. When price is rising and volume is somewhat declining, it's suggesting that buyers could be running out of steam. Weak buying and a possible trend reversal where the sellers might be stepping in. When price is declining and volume is rising, this is suggesting strong selling. The sellers are in control. When price is declining and volume is declining, this is illustrating weak selling, and the sellers might be running out of steam, and the buyers could be stepping in. So as we think about all these things we just went over in volume, and identifying these volume scenarios, really start to think about how it's all playing into the bigger picture. These are pieces of the puzzle that we are trying to put together, additional tools, more points of confluence. This is ultimately going to help us as we enter trades, manage trades, and exit trades. Now let's take a look at these volume scenarios in real time on a chart.